All right, let's jump straight into today's explainer. The KOSPI just slipped 1.23%. And get this, it happened on the exact same day Samsung posted absolutely record-shattering earnings. It's this massive collision of micro fundamentals crashing right into macro forces, and we need to unpack it fast.
We're looking at a total market paradox today, guys. I mean, we have incredible corporate earnings that are just being completely ignored by a falling market. So you have to ask yourself, why on earth is such good news triggering a massive sell-off? Let's look at the hard data for a second. Samsung absolutely crushed operating profit expectations by 56% compared to the prior quarter. But then, the KOSPI still drops 1.23%. Normally, these two numbers move together, but today they violently disconnected. And Samsung's second quarter performance was honestly just massive. We're talking about 171.5 trillion won in revenue. That's a 28% jump right there. Plus 89.5 trillion won in profit. So, the fundamentals, they are undeniably strong. The crucial driver behind these crazy numbers is this robust, ongoing demand for AI memory. We're seeing this confirmed by higher server DRAM shipment volumes and new HBM4E samples. Actually, forecasts are now showing a severe memory shortage stretching straight through 2028. And the supply shortfall for 2027 is expected to widen even more. But how did the market actually react to all this? Red. Just a sea of red. For the very first time in Korean stock market history, we saw consecutive circuit breakers over 2 days, heavily concentrated in large-cap semiconductors. The selling pressure was literally relentless. Looking at the daily chart, it's a steep drop. The KSPI closed deep in the red at 5,593.56. So, despite Samsung's stellar report, the whole index got dragged down by this really aggressive, specific selling force. To understand who's actually driving this, we have to look at the micro-market forces. On one side of the ring, you've got foreign institutional capital happily buying the dip in big tech. But on the exact opposite side, retail investors are dumping cash equities straight into that foreign buying. 1.43 trillion won. That is the sheer wall of retail selling that individuals offloaded in a single day. Just massive. This huge outflow completely overpowered the combined 1.41 trillion won bought by foreign investors and institutions. Basically, this retail exodus entirely capped the rally. Okay, moving on to Section 1, the macro discount effect. This is the hidden force dragging things down. Here's the exact chain reaction at play. Step 1, Federal Reserve Chairman Kevin Warsh lowers the likelihood of long-term market intervention. Well, step 2, that raises the term premium, the extra compensation investors demand for holding long-term debt, which causes Treasury yields to spike. Step 3, this spikes the equity discount rate. And the final step, capital-intensive tech valuations just get crushed. The immediate results of all this? The U.S. 30-year Treasury yield actually broke above 5.20% intraday. When the baseline cost of capital shoots up this high, it sends shockwaves straight across the Pacific. And then, of course, geopolitical triggers are pouring fuel on the fire. We've got Iran's missile attack on a U.S. military base and renewed Houthi fighting pushing energy risks way up. WTI crude rose 1.5% and Brent crude spiked a crazy 6.65%. Higher oil means higher inflation expectations, which just pushes those yields even further up. This contagion effect hit Korea instantly. The Korean 10-year Treasury yields climbed 5.5 basis points to 4.315%. The local bond market didn't wait around. It immediately priced in the U.S. rate hike and that big oil spike. So the crucial point here boils down to the pure mechanics of the equity discount rate. A higher discount rate essentially destroys the present value of future cash flows. And who relies the most on massive future cash flows to justify their current valuations? Capital-heavy semiconductor stocks that require huge upfront investments. The macro environment is just severely punishing them right now. All right, on to Section 2, smart money's hidden move. Let's look at the signals hiding beneath the surface. Notice the really sharp contrast between these 2 days. On July 29th, foreign investors wanted to avoid direct price risk, so they were hiding out in preferred shares. But then on July 30th, they completely reversed course. They started aggressively buying common shares for pure direct price exposure. The evidence for this?
is massive. 582.7 billion won. That's the foreign net buying in SK Hynix common shares alone. They actively chose pure price exposure over safer alternatives because they're looking ahead. They see that 2028 memory shortage raising expected net profits. Foreign capital is quietly making this huge systemic bet, just sweeping up semiconductor equipment stocks on the KOSDAQ. We saw 21.4 billion won pour into PSK, another 16.6 billion into TESS. Basically, they're banking heavily on future capacity expansion by Samsung and SK Hynix to meet all that upcoming AI memory demand. So, we're left with this massive tug of war. Will the undeniable reality of a 2028 AI memory shortage eventually overpower today's macroeconomic fears and soaring discount rates? That is the big question driving the market right now. If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.